Welcome to my YouTube channel where I speak about finance, investing, and money. My name is Arham Shah, and this is my first YouTube video. What are my qualifications? Currently, I am studying in class 12. I have done CFA Investment Foundation program. I started studying about finance in my 11th standard. So I've been studying about finance since 1.5 year in Finacle Investment Academy. Uh, in Finacle, I learned about personal finance, tech edge, Indian financial system, business analysis, and valuations. Today, I am going to talk about opportunity cost. What is your opportunity cost? What are you actually earning from your investing? So, Warren Buffett said that business is a machine. You invest some cash into the machine and you get some cash back. Suppose you invested $100 into the machine and you get back $120 from machine, which is business. So you are earning 20%. Agreeing to Warren Buffett, Michael Momosin said that you are not earning just 20%, you are earning something else. You are maybe earning less than 20%. Why? You Because there is some opportunity cost attached with your investment. So to find the opportunity cost of investing in India, we calculate that Nifty is the best opportunity cost because it is the average of best businesses in India. So by calculations, we found that the opportunity cost comes out to be 12.44% rate. How did we found that opportunity cost is 12.44? We did Nifty Rolling Return Analysis, in which means that suppose I am standing in 1996. What if I invest my money in 1996? I get minus 1.73% return. What if I invested in 1997? I get 15.35% return. So you can see the volatility of the markets from here. Similarly, here it's 41.78 and here it's minus 24.88. Here it's 81%. So the markets are really volatile. But you are not just investing for 1 year, suppose. You want to invest more. You want to invest for suppose 3 years. So in 1996 you invested and you get 3.4% return. But suppose you invested in 1997, you get 16.43% return. So in 3 years bracket also it's really volatile. It's less volatile comparatively from 1 year bracket, but it is volatile. Suppose you are investing for 5 years, you get 3.11% return, and here you get 24.27% return. Here also it's volatile, but volatility decreases as the duration increases in 7 years, 10 years, and 15 years. From 15 years bracket, we can see that the volatility have decreased a lot and it has been giving some quite positive amount of returns as compared to 1 year bracket. So taking the volatility into the mind, we took the average of every 1 year return, every 3 year return, every 5 year return, every 7 year, every 10 year, every 15 year return. We got these numbers, and these are approximately around 11.5 to 13.5%. So if we even take the average of these numbers, we get approximately 12.35%. So if you invest in any of the business. If you do any business in India, you should minimum get 12.35% return, because Nifty is giving you 12.35% return. If you don't work at all and invest money in Nifty, you are going to get 12.35% returns. We took opportunity cost as Nifty because it's like combination of best businesses in India, top 50 businesses in India. So even though you are not in top 50, though you are doing some business, you should get minimum 12.35% returns if you are doing any business in India, whether it be sugar, coal, diamonds, whatever business you do, you should minimum get 12.35. I would not do business if I don't get 12.35% return. I would rather Netflix and chill. It's my personal opinion. So we know now what should be our opportunity cost. But from this, can we calculate that what should be Nifty trading at by compounding it from 1996 to 2020? I compounded Nifty for 25 years and I got 17,000 at Nifty valuation, if I'm not wrong. I took 12% as the growth rate of Nifty, and 25 years, as it is more than 25 years, I guess it's 25 and 7 months. But I just took 25 years, and the starting price of Nifty was 998. So it's negative because you are keeping the money, your money is going from you out. So I got the valuation as approximately 17,000. So it clearly states that in 2020 Nifty should be trading at 17,000, but it is around 13,000. It has not reached even 13,000. So I guess Nifty is really undervalued right now, and it should trade around 17,000. So from this, I expect next 2-3 years we can see huge rallies into the markets. And this was my analysis for Nifty rolling return and opportunity cost and Nifty valuation. So if you have any doubt, you can comment on the video. If you have any suggestion, you can comment. Tell me if you want my videos to be in Hindi or English, and like the video and subscribe to my channel if you really like the video. Thank you for listening to me till now. Thank you.